Hey everyone, James Anadon here with Pillar 6 Advisors. Today is April 9th, 2021, and welcome to our second quarter market outlook. Of course, with these quarterly market outlooks, our goal here is to look at a fundamental basis for the next 3 months moving forward. But before we do that, what I want to do is go ahead and take a look at what drove returns last quarter. Of course, as everyone knows, we went through a pretty volatile period there between February and March, and we're still kind of going through that right now. And we really put us in this position where we weren't much further off from where we were at the end of 2020. And a lot of that had to do with some just extremely large movements within certain areas of the market. We saw some bifurcation between different asset classes, and then as well too a big move in the treasury yields. That was more of a knee-jerk reaction of investors worried about a earlier move for the Federal Reserve to become a little bit more tighter on their monetary policy. And of course, as we're starting to see right now, that's definitely a bit overblown. Not to say that they can't come in earlier than what is expected, but at this point, it still seems that they are, as they said, all in on purchasing securities and in their mind, they're controlling the yield curve. Obviously, inflation was a big part of that as well, too. And from the Federal Reserve's point of view, they're not too worried about inflation. They actually want inflation to run a little bit hot. And so we're kind of seeing some of that stuff play out in the market right now. Now, one of the big major areas that we started to see over the last 2 months was a shift from high PE stock companies, meaning a lot of these guys that were a bit overpriced within the tech space. There's other spaces too, not just technology, to more value-oriented companies, which, by the way, there is value-oriented companies within the tech space as well too. Just look at Apple and Microsoft and things like that. But, what we're moving forward here to in this next quarter is we need to look at how this reopening of the economies is looking to us. We have a lot more vaccinations coming to play. Of course, there could be some hiccups and problems with that. But right now, when you're looking at, booking data for flights and individuals wanting to get out of the house and go on vacation, it's actually looking, things are looking up. We do have some difficulties with job creation. There's some stimulus bills and as well a spending bill for infrastructure coming to play here. And that is another very, very important factor that we have to look for coming through this next quarter. Beside that, let's look just as a broad-based thought process. Of course, when we go through some periods like we went through February and March, things can seem a little bit disconcerting. We always think back to, man, we just went through a really difficult time in the market. We're in a pandemic phase. Well, in our view, we're actually starting to move out of that. Not to say we are done with it, but let's go ahead and take a look at consumer spending. We spoke about this last quarter where we looked at the household savings rate, and it was just astronomical at the time. Actually higher than it's ever been, higher than it's been since the 1970s, late 1970s. And we know what happened since the 1970s till now. We've gone through a pretty significant bull market through the 80s and 90s. We're back in this position where we have households with high savings rates and a lot of pent-up demand. And a lot of that pent-up demand we'll start to see playing out here in the future. And of course that leads people to believe that, hey, we might hit a huge inflationary period. And that may be true, but I don't believe that that's going to happen in this next quarter or even the quarter after that. That's more of a 2022 type of scenario that we need to pay attention to then. Obviously, yield curve the treasury rates are going to be volatile through this quarter and next, and we need to pay attention to that, and that will add some volatility to the markets. But, you have a Fed who's, again, said they're all in, a Treasury who said they're all in keeping, interest rates where they are, adding more money to the economy. The Fed has said they're going to continue to buy debt. These are all good things for the economy. And one way that we are actually starting to see that is we're starting to see a lot of money move into cyclical stocks. Companies who do better in a cyclical type of environment where, we're starting to get some growth out of the economy again. And you have to remember the market's going to move 6 to 12 months before, actual news shows. And when you have a Federal Reserve and the Treasury, the U.S. Treasury back saying, hey, look, we're going to do whatever it takes to get us back working, where we were at pre-pandemic, or at least pretty close to it. In our minds, we're going to see a spending boom. Within at least certain areas of the market, with service sectors are starting to open up again. We're starting to see a lot more people take vacations. That's not to say the consumer and businesses have not changed at all. Consumer behaviors change, business behaviors change, and so, there's a lot that has to be incorporated with that. Again, this video is just a supplemental high-level look at what's actually written in our quarterly market outlook piece that's attached to this video. Please feel free to look at that, and if you're more interested in following us on an ongoing basis, from a technical perspective, where we look at the markets and how they're moving on a quicker level, pay attention to when our technical analysis videos come out. They come out about twice a month, and that will keep us more abreast of the situation as things change. Again, thank you guys so much for your time. Feel free to reach out to us to go over your portfolios, and if you have any questions. I look forward to talking to you guys soon. Thank you.